Hello from a bitterly cold Friday the 9th. I'm FxPlew and this is the market brief. So banking regulation, it's not exactly exciting stuff now, is it? However, since the credit crunch in 2008 and the financial crisis that followed, banks have been prevented from speculating with client money. Commercial banking activities, which is what covers how the banks behave with money deposited by customers like you and me, that had to remain ring-fenced and separate from any investment banking activity. That's the more exciting side of banking, where speculative trading is done, and that makes all the real money for the bankers, but it also carries all the risk. If you're interested in any of that, Liar's Poker by Michael Lewis is a great book about the golden age of investment banking, all the years of excess, and then of course The Big Short covers how that all went wrong with the collapse of Lehman Brothers in 2008. Very easy reading, thoroughly recommended. I'll drop a link to both in the comments below. But anyway, these banking regulations, they're all set to change. As a direct result of Brexit, new measures will abandon the requirement for banks to separate commercial banking from the far riskier investment banking operations. That means the banks will be able to have a punt on the market with our money rather than just their own. While they're at it, the government will remove the current limits on banker bonuses too. Happy days for the square mile. A word to the wise though, reward on risk doesn't always work out so well. Remember how Nick Leeson bought down Barings Bank, and that was way before mortgage-backed securities ended up causing the credit crunch. Anyway, critics say it's a big risk to public savings, and supporters say that it will kickstart the economy and help alleviate the effects of the recession. Time will tell. Meanwhile, that recession creeps ever closer in the UK. The housing market is already showing signs of a slowdown, and now the employment data for new hires is following suit. That data suggests that workers are becoming a little more conservative and staying in the safety of their current roles, while there is, of course, so much uncertainty ahead. It's a similar story in the US, where the Fed policy of moving interest rates into restrictive territory slowly looks to be reducing demand without decimating the jobs market. Weekly jobless claims rose once again, but only slightly. We had 230,000 new claims reported last week. In the market, things are pretty quiet ahead of all the central banking meetings next week. The rate decisions there may set currencies on a new path towards year end. But ahead of all that, sterling is rather struggling to break above 122.80 against the dollar. We topped out at 122.50 yesterday, and we opened this morning. I think we were around 122.65 against the dollar, about 115.90 against the euro, and euro dollar is around 105.80 this morning. That's it from me. Have a great weekend.
If you do not have a clue, then just tweet through and ask FxPlew.